Hi everyone. With COVID-19 affecting the global economy as well as various sectors, Singapore government has provided various support packages to help businesses as well as households to tide through this difficult crisis. So today, in this video, we're going to share one of the key measures to provide immediate cash support for companies. To address the company's short-term liquidity needs, there are two loans available. First, the temporary bridging loan scheme, which allows companies to borrow up to $5 million with fixed interest rates capped at 5% per annum. There is also the SME working capital loan that allows companies to loan up to $1 million and the interest rates remains the same. So for both loans, the government is going to risk share 80% and the maximum repayment period is for 5 years. For TBLS, Singapore citizen and PR who owns 30% of equity holdings will be able to apply. And as for the working capital loan, other than meeting this criteria, they would also have to meet another criteria of having a group revenue up to $100 million or a maximum employment of 200 employees. So in order to apply, companies can approach participating financial institutions. And these loans are available for a one-year period from March 2020 to March 2021. Companies now also have the option to apply to the PFIs for a one-year deferment of principal repayment to manage their debts and to manage their short-term cash flows. So with these two loans in place, we now highlight some of the key points for companies. Firstly, if companies are already on the SME working capital loan, what you can do currently is to call up your bank and to get them to do a reassessment of your credit line. Now that the loan, you can loan up to $1 million. This would then be able to help you with your immediate current needs. When it comes to these two loans, you realize that with the interest rate of the TBLS cap at a fixed rate of 5% per annum, this would obviously have a lower effective interest rate as compared to the working capital loan. So our suggestion to you is therefore to choose to take up the TBLS first before considering the working capital loan. And the last pointer to note would be that even though companies have this option to defer their principal payment for a year, they need to take into consideration that by deferring this, it would prolong their future obligations. Therefore, it is important that you discuss this internally before you decide which loan you want to apply for and whether you would want to do a deferment of the principal repayment. MAS currently is also working with the FIs to support SMEs with continued access to bank credit and insurance cover. So the deferring payment of principal on secured SME loans, as I mentioned earlier, they can now apply to defer until 31st December 2020. However, the interest remains payable, including the additional interest that is accrued on a deferred principal amount. The loan term may be extended by up to the corresponding principal deferment period. And the only criteria here is that the borrower must not be more than 90 days past due on loan repayments as at 6 April 2020. Bank and finance companies can also now apply to MAS for funding to get lower interest on SME loans. And the only criteria here is that any savings in the funding cost has to be passed down to the SMEs. And lastly, SMEs can also now apply to the insurers for installment payment plans so that they can better manage their short-term cash flow needs. So this is all I have in relation to the measures to help support SMEs in their short-term cash flows. Thank you.